Over recent years, Japan has often been pushed into the background when it comes to analysing and understanding what's driving the global economy and global equity markets. But Japan is 6% of the world economy and roughly 8% of the MSCI World Index. And with recent developments and some recent improved performance, it's worth once again considering what is driving the Japanese economy at the present time. And with Shinzo Abe winning the leadership ballot on the weekend and giving himself another 3-year term as leader of the party and a good chance to become the longest serving prime minister in Japan, we need to just once again have a look at the performance of the Japanese economy. So let's just quickly look at performance of equity markets since his election back at the end of 2012. So MSCI World Index, these are all based at 100 at the end of 2012. Then we look at the US equity market performance, so more than doubled over that period. If we put in Europe, Europe is basically up 20%. Now, these are all in US dollars. Pacific ex Japan, as you can see there, up only around about 5%. Emerging markets coming in very low over that period. And then if we put in Japan, Japan sort of sits up there just below the overall performance of global equities, obviously second only to the US. So it's been a reasonable period of equity market performance since 2012. So what is actually going on in Japan and what has driven that performance? So one of the first areas we should look at is what's happening to earnings growth. And so on this chart, we're just looking at 12-month forward EPS estimates over that same period. And clearly Japan has had superior EPS growth. Now, a lot of that is driven by the weakness in the yen, particularly during 2013 and 14, but it's been able to maintain that performance. So that's the top line there in this chart, the US here, and you can see towards the bottom end, both emerging markets, Australia and Europe ex-UK. So earnings growth has been obviously a key driver of this longer or this outperformance over the past 4 to 5 years. In a global context, Japan has done pretty well on the investment side as well. So in this chart, we're looking at private investment spending in the three major economies, developed economies, and the blue line here represents the MSCI World Index. So the green line here, and they're based at 100 once again. This is capex spending, private sector. You can see US obviously has been the key driver of that, particularly since 2010, 11, a very strong pickup in investment. The other two lines down here have lagged quite considerably the US, as they have in the terms of equity market performance, but Japan is the darker red line. You can see quite a kick up in investment spending, really fairly continuously since about 2013, and so that's been a positive contributor. Europe was quite late to the party, is still lagging overall investment growth, but really only commenced its pickup in 2014. So Japan has benefited from quite a solid rise in investment spending. Let's just have a look at some of the other areas of the Japanese economy. Consumer confidence and small business confidence. So these charts are just various indices. The blue line representing consumer confidence. The pink line here is actually sales forecasts of small business. And you can see there's been a sort of a grind upwards. They're not at very high levels, but certainly been a lot more positive, although we can see some signs of perhaps a rolling over more recently. So consumer confidence and business confidence has been reasonable. If we go down and have a look at on the wages, or actually on the wages front, and this is where it does get a little bit interesting. So this chart goes back to the late 80s. You can see wages growth during that period up around about 4%. And basically from about 1998 onwards, we've seen predominantly negative wages growth. So we've got a couple of measures here in this chart. And what we've done is we've smoothed those numbers. They tend to be quite volatile. So What has happened just recently, you can see the blue line, which is total cash earnings for wage earners. That's picked up. That's a smooth number, so saw quite a strong number. I think it was June, and then it fell back in July. But on a smooth basis, wages growth is growing probably at its best pace really since the mid 1990s. So this is a very positive sign. There's some suggestions that there's some seasonal effects sort of creeping in, more so than usual, but nevertheless the trend has been, steadily up in certainly in the last 6 months. In real terms, wages growth has picked up to around about, let's call it a 1.5% or thereabouts. So some positive signals, early days yet, but certainly some positive signals on the wages front. Elsewhere, and related, I suppose, to the to wages growth is this just looks at the job offer rate. And you can see that the labour market has become very tight as we've seen. This chart goes back to the early 1990s. The pink line shows the job offer rate, so fewer jobs available per applicant, and that's reached record high levels. And this is that wages number that we just saw before, 3-month moving average of the annual rate, sort of sitting up around 2.5%. Going forward and looking at some other areas of the Japanese economy, and probably one area that's been a bit disappointing has been the growth in consumer spending. So there's two series here. One is the quarterly private consumption measure, the red line out of the national accounts. So that's that one there, and you can see that consumption growth very, very modest still, barely above zero. And the blue line here is sales at department stores. That's a slightly smooth number. That's growing at, an okay rate, but certainly hasn't taken off. So there does seem to be a pickup in investment, quite a solid pickup in investment spending. Earnings growth has been quite strong. There's some signals of wages picking up, but at this point, consumer spending is still really, um, struggling to get any momentum. As we look forward in the Japanese economy, one of the areas that we need to really be focused on, and certainly a goal of the BOJ and the Prime Minister, was to get inflation up to 2%. So how are they tracking in relation to this goal? So if we just get that up here, I'll just go back to, we'll go back to 1989 and look at annual inflation. So this is CPI. So the CPI in Japan, the numbers just out the other day show the inflation rate rising back up to about 1.3. That's the headline rate. So it's a respectable reading. Probably more importantly, we should look at the core measure, and this one here shows the core measure. So it's the pink line there. So that's just sitting down at quite a low level, around about 0.3, 0.4%. So the target being 2%. Initially, it was sort of set for 2019. Certainly, the BOJ and government keep pushing that out. So they are struggling to get inflation, but certainly some of the drivers and other signs are a lot more positive than what we've seen. We've got quite a tight labour market. Perhaps wages are starting to pick up as well. Just want to finish up with one of the risks for the Japanese economy, and that is its exposure. And this has been a positive, so we can't put down the improvement in the Japanese economy over the past 5 years entirely to the government and its reflationary efforts, although that has played a part. It's certainly been a positive global economic backdrop for much of that period, and that's helped drive the Japanese economy. And Japan is probably, well, we estimate it's probably the second most exposed region to global trade, behind EM. So these are measuring just the if you like, the sensitivity of earnings and growth to changes in global trade. And so EM comes up with the highest number. That's the dark blue line. And Japan comes up second. So any downturn in global trade, whether it's related to the escalation in the trade war, or whether it's related to some other factors that reduce growth, Japan is going to be impacted. So that's probably the near-term risk for the Japanese economy, but elsewhere, some of the fundamentals we think have certainly improved, and perhaps investors should pay increasingly more attention to the Japanese economy. Thank you.